Did you know that there's a special way for Canadians with disabilities to get up to $90,000 in free money from the government? This is the Registered Disability Savings Plan, or RDSP, and it's one of the most powerful saving tools in Canada. You could be missing out on some free money. In the next few minutes, we will explain 6 points, exactly how this plan works, what you need to start, and the few simple rules you must follow. Let's dive in. If you have followed me for a while, you know that I'm not a big fan of government-sponsored plans. The biggest reason, and in my opinion, the only reason to open this account is the free money the Canadian government adds. Point number 1. It is always smart to save money for when you are older. That you already knew. But if you or a loved one needs extra support because of a long-term disability, the RDSP is a special savings plan designed just for this purpose. It is a way to set money aside and receive free government money. The most important step to open this plan is getting the disability tax credit approval. Think of the disability tax credit as the key that unlocks the RDSP. Without this key, you cannot open the plan. You don't yet have disability tax credit approval? Don't worry, we can handle that paperwork for you. Point number 2, who can get the RDSP? To open an RDSP, the person who will use the money, the beneficiary, needs to meet a few simple requirements. Number 1, they must have the disability tax credit approval. Number 2, they must live in Canada. Number 3, they must have a valid social insurance number. And number 4, they must be under age 60 when the plan is open. Every RDSP has a beneficiary and holder. The holder is usually a trusted adult, like a parent or a spouse, who opens and handles the decisions for the plan. Although the beneficiary may also be the plan holder in some cases, the beneficiary can only open one RDSP. Do you want a quick and easy way of determining if this is the right thing for you? Visit score.towerlife.ca/RDSP, answer a couple of questions, and we will provide you with a free instant assessment. Point number 3, putting money in. We only work with Canada's top insurance companies, which we select to open these accounts. The RDSP is built by making contributions or simply putting money in. Almost anyone can contribute, family, friends, or the person managing the plan. They just need the manager's permission to do so. You can save as much as you want each year, but the government sets a total lifetime limit of $200,000 that can be contributed out of pocket. The money that you put in and the money it earns over time grows without being taxed right away. You can keep putting money into the plan until the end of the year when the beneficiary turns 59. And in that case, growth is only taxed at withdrawal. Point number 4, the government's free money. There are 2 types of free government money for this account. Type number 1, the matching grant. That is the Canada Disability Savings Grant. The government will match your contributions based on your income. You can get up to $3,500 per year with a lifetime maximum of $70,000. That means if you invest from your own pocket just $1,500 a year, you can usually get the full $3,500 grant for that year. That is for a family net income of less than or equal to $114,750 as of 2025. However, you might still be eligible for some of the grants above that income level. Type number 2, the free bond, the Canada Disability Savings Bond. If your family has a low income, less than or equal to approximately $37,487 net as of 2025, the government will still put in up to $1,000 per year, up to a lifetime maximum of $20,000. The best part is you do not have to put in any of your own money to get the bond. The crucial deadline to remember is this: the government will only add the matching grants and free bonds until the end of the year the beneficiary turns 49 years. If you have been eligible for the disability tax credit for years, you can apply to get the grants and bonds you missed from the last 10 years. Let me give you a quick example of this. Let's take the example of Christian. Christian is 30 years old and was eligible for a disability tax credit for the past 10 years. Christian may be entitled to receive up to $35,000 in grants and $10,000 in bonds without even knowing it. That's $3,500 times 10 and $1,000 times 10 for 10 years. Point number 5, taking money out. As with everything quote-unquote free from the government, there are caveats to consider. The RDSP is designed to distribute money when you're older. When you take money out, it is treated like this. The money you originally put in is not taxed, but the money the plan earned, that is the investment growth, and all the grants and bonds the government gave you will be taxed as income at your tax rate at that time in the future. The most important rule to remember about withdrawals is this. If you take money out before the beneficiary turns 60 years old, the government will ask for some of their contribution money back. This is also known as the assistant holdback amount, or AHA. The rule of thumb is that for every dollar you take out, you might have to pay back $3 of the grants and bonds deposited in the last 10 years. So if you can, it is best to wait until after age 60 to start withdrawing from this account. Point number 6, why our RDSP plan is special. As you may be aware of, we are first and foremost big proponents of life insurance for capital formation. Opening an RDSP with us is unique because we only use special investment funds that offer insurance protection. These investments give you guarantees, which is like a safety net. This includes a guarantee that helps protect the value of your savings at the time of account maturity or in the event of death. This is a special way to help keep your long-term savings safe in a way that the banks can't provide. Your next steps are simple. First, if you don't have it already, let's apply for a disability tax credit, which is the key to open all this. Second, talk to one of our team members or your financial advisor to open your RDSP and start collecting those grants and bonds. If you don't have the disability tax credit, but you think you may qualify, our team can help you complete and submit that application or even do it all for you. Now, do you want to find out if you qualify? Visit score.towerlife.ca/RDSP, answer a couple of questions, and we will provide you with a free instant assessment, which is unique in the industry. Remember, this is general information and not financial advice. Always talk to a qualified financial advisor or tax expert for advice specific to your unique situation.